We've got Nilesh Jain, the Vice President and Head of Technical and Derivative Research at Centrum Finverse, joining us this afternoon. Thanks so much, Nilesh, for taking the time. Good afternoon to you. Are you looking at the equity markets and seeing a bit of a sell-on rise kind of a situation play through? And do you see more pressure on the downside because you've seen a significant cool-off, not just in IT as a pocket, but also in the bank nifty?
Very good afternoon to you, Alex. Good afternoon, everyone. Absolutely, Alex. So if we look at the overall product structure where we are constantly witnessing selling pressure at the high level, if you see Nifty index specifically, the 50 and 100-day moving average, both are exactly placed at 25,730, zone. So that is acting as a strong barrier as of now. Even if you see the momentum indicators and oscillators where we have seen a fresh sell crossover and MACD, that is basically indicating that whatever pullback we might get, that is likely to get sold into. And the only support that I can see on the chart is placed at 25,340. That's the 200-day long-term moving average. If it breaks below that, then the target on the lower side could be somewhere around 25,200 to 25,100. So these are the levels that we might see going forward. Overall, we expect Nifty to oscillate in the broader range of 25,200 to 25,800. That's the broader 600-point trading range. We are not getting any clear indication that will give us some bit of confidence that we'll see that breakout coming in. But as of now, whatever pullback we get, that is likely to get sold into. So the structure looks slightly on a weaker side.
Some of those heavyweights as well, leading to that drop that you're seeing at State Bank of India, though there is certain amount of support that is being lent by ICICI Bank in the private banking space. So therefore, in this context, in such a bottom-up approach that is advised at this stage, Nilesh, what stocks stand out? What individual ideas do you have that people can look at?
We have a balanced approach as of now because looking at the market volatility, we are witnessing both sides of move. First of all, on the long side, we have a buy recommendation on Lotus Lab. We have seen a very strong momentum recently. Counter has formed a higher parameter formation. Today, we have seen a very good spurt backed by strong volume. So Lotus Lab, and apart from that, majority of the pharma and healthcare stocks are doing good. So watch out for this particular space. Lotus Lab looks positive for 1100 plus kind of target on the upside. One can keep a stop loss below 1055, and Lotus is a buy. And apart from that, on the sell side, we have Realty Pack that has remained under pressure since a long time, and the Nifty Realty Index is constantly forming a lower top and lower top formation. So even this kind of a structure, DLF is looking weak, and we may see a follow up on the lower side in DLF towards 600 to 590. And one can keep a stop loss at 621, and sell on rise should be the strategy in DLF.